Okay, a very good afternoon to everyone. So my name is Feng, a research analyst at DBS, covering the consumer sector. So today I'll be sharing some top ideas within the Singapore consumer space. So I think overall, there seems to be a general sentiment that the market will be quite bad, with the SVB, Credit Suisse. So maybe a show of hands here, who is worried about, that there's a recession coming? Okay, I see a couple of hands, right? So I think the picks that I talk about today will be quite aligned with what you would like, because the picks that I'm talking about today are essentially fortress. They have fortress-like characteristics, right? So the first pick is Sheng. Okay, so I think this is a name that requires no explanation. I'm sure every one of you here knows what Sheng is. So they are essentially a brand synonymous with value. And we believe this is a fortress-like company for two key reasons. One, it has a huge cash balance sheet of 217 plus million. And two, it's because of the earnings profile, right? What they are selling is essentially groceries, and you will require groceries regardless, whether it's an upturn or downturn. So we do like this counter, and we have a target price of 189. So it's roughly a 15% upside, and it still provides a dividend yield of decent yield, 3.8%. So if we look at the overall earnings profile, you can see that they actually have a sharp spike in 2020 because of the COVID pandemic. And because of that, with reopening, the revenue has sort of came off a bit, but you can see the top line in terms of the net earnings level, it's still relatively resilient. I think that the key reason is that management has managed to help improve the margin profile through two key means. One is improving the fresh food mix, which has higher margins, and of course, this push into house brands. So with these two factors, they actually managed to kind of keep profits relatively stable, even though revenue has trended down a bit. So we think that this counter is actually would perform quite well if there's a recession coming. Because looking at past data, back in the 01 crisis and back in 2009 GFC crisis, you can see that grocery demand has actually picked up quite a fair bit during this past two recession. So we see that Sheng will be actually a key beneficiary should there be a recession coming. So we really like this counter, and we have reiterate a buy call with a 15% upside on this. Okay. So our next pick is actually Delphi. So to give a bit of background what Delphi is all about, Delphi is essentially a chocolate confectionery company. So they're a manufacturer. So they do their own brands, which is Delphi, Van Houten, Silver Queen. So I think these brands will not be known to most of you guys here because they sell mostly in Indonesia. And that's one of the key reasons why we like that, because Indonesia is where we see quite a significant growth there. And of course, another reason why we see this as a fortress play is because of the huge cash position of almost 80 million. And of course, they do have this smaller business, which is distribution. So they do distribute, I'm sure a lot of you are familiar with the brands that they distribute. Fisherman Friends, Lockett, Pringles within the Southeast Asia region, so which is Singapore, Malaysia, Philippines, and Indonesia. So this is a brief overlooking profile of Delphi. And we see that this company is very, very cheap, trading at only 11 times. So we have roughly a 40% upside based on the current traded price, and a very good yield of 5.8%. So if you look at the overall revenue profile, you can see that actually 60% comes from their own brands and 40% from agency brand. But if you look at profitability-wise, you can see that most of their profits are actually coming from Indonesia, which is mainly where they sell most of their chocolates, right? So that's really their key profit center, Indonesia. That brings us to our investment thesis. So our investment thesis here is really about that upside in terms of chocolate per capita consumption. We look at Indonesia among the ASEAN peers. You can see, Philippines, Malaysia, Singapore, which have far higher chocolate consumption. So we see that even if Indonesia reaches sort of like Philippines level, it's almost 20% upside in chocolate consumption. So that will be a very strong driver in terms of top line and bottom line growth. So we really like this company because of its cheap valuation and, of course, the fortress-like characteristics where everyone would like to be in, right? High cash position and a play in the Indonesian market, which is growing. Even if there should be an economic recession, we think that our internal economists think that the Indonesian economy would do fairly quite well because of a very strong kind of consumption, domestic consumption. And of course, I think the yield is something a lot of you would really like, 5.8%. It's way higher than what you'll be getting in the T-bills or fixed deposit, right? So these two are our favorite picks. So if you really want to know more about our top picks, you can please, if you guys have your phone with you, have Telegram, please sign up on our DBS Direct, Insights Direct, right? And follow us to get more key ideas. If you do not have Telegram, you can also go on our website and search for DBS Insight Directs and to get a lot more research insights. And that's it for my part. Now invite my...
All right, thank you very much, Feng. Please give me a big round of applause.